Retirement is your longest holiday. A great time to pursue your passion and make a new beginning. Imagine having the perfect day after you retire. Early morning yoga, a nice hot tea, fishing in a beautiful lake, resting under the sun in beautiful Hawaii with fellow retirees, a second honeymoon with your spouse, and what else? Great! What's your personal roadmap for you to get to your dream retirement from wherever you are right now? If you answered buying and holding stocks for the long term, then we have a few insights to share. At Live Oak Wealth Management, we serve the planning and investment needs of corporate employees, those approaching or in retirement, and corporate 401k plans. Our company is named after the live oak tree, a symbol of our philosophy of providing strength, protection, and a solid financial foundation for our clients. With their combined years of experience and varied skills, Sean and Matthew, partners at Live Oak, form a versatile team capable of providing the comprehensive services retirees and pre-retirees need to help grow and preserve their savings while planning for an income stream during and after retirement. You may already be invested or still looking for investment options to enjoy a successful retirement. Good, but do you know, in the US alone, nearly 70% of investors lost money in the stock market in 2015? Yes, this is the other side of the stock market which many people don't know. So before we tell you why they lost their money, let us tell you how we invest our clients' money. The stock market is no different from a supermarket. Both markets work on the basic principle of economics, supply and demand. We don't buy summer squash in the winter or winter squash in the summer. When there are more buyers than sellers, the price of the produce goes up. When there are more sellers than buyers, the price goes down. In this volatile market, you need to implement wealth accumulation strategies and wealth preservation strategies to achieve your retirement goals. That's exactly what we do for our clients at Live Oak Wealth Management. Buy and hold has been the strategy of most investors. This would work if your assumptions about various components of your portfolio are right. But it is also possible that it doesn't. An equally large, if not larger risk to the buy and hold approach to asset allocation is if you will have the psychological fortitude to stay the course during the inevitable rough patches. What is your tolerance for pain? Many investors equate investing to only buying stocks. We have access to other asset classes which were not available before, like US stocks, international stocks, cash, commodities, foreign currency, fixed income. An alternative approach to buy and hold is to tactically allocate among a broad range of asset classes using relative strength. A tactical approach to asset allocation simply acknowledges that asset classes go through secular bull and bear markets, in that investors typically have a limited investment time horizon. But at the same time, there is a possibility that one or more asset classes could go through a severe bear market that could destroy your retirement savings. So, do we have a strategy that allows you to participate in a bull market and potentially save you from a bear market? Yes. Tactical portfolio management. The cornerstone of tactical portfolio management is the point and figure methodology that has existed since the 1800s. Charles Dow was the first proponent of the point and figure methodology and the original editor of the Wall Street Journal. Charles Dow appreciated the merits of recording price action and understanding the supply and demand relationships in any investment. As both consumers and investors, we are familiar with the forces of supply and demand, introduced in any Economics 101 class. By having the ability to evaluate changes in the market, we have taken the first step toward also becoming responsive to both bullish and bearish periods. From the table, you can see how asset classes stand at different positions from top to bottom in the last 10 years. No asset class performs best at all times. Think about it like ranking your favorite sports team. Every sport has a ranking system: baseball, football, tennis, etc., and they are all based upon the same philosophy. The better a player or team performs, the higher they go in the rankings. When they start to lose, they begin to fall in the rankings. We can affect the same type of ranking system based upon how an asset class performs. The more it outperforms something else, the stronger it is. When it begins to lose that strength, it falls in ranking. Keeping this in mind, how is the strongest asset class identified? We follow 4 simple steps to determine the ranks of asset classes. The process is called the Live Oak Wealth Management Tactical Portfolio Research. Step 1. A roster is established for each asset class. For instance, in the international equity space, all areas of the world are represented, from Europe to Latin America, to Canada, to Australia, to Asia Pacific. The process of determining a roster is essential so that no member of an asset class has too great of an influence. Step 2. A relative strength calculation for each member is compiled for each member of the roster versus every other member of the evaluation set. In essence, a very large arm wrestling tournament is held. After all individual calculations are computed and charted on a point and figure basis, each member of the roster now has its number of relative strength wins. Step 3. The total number of wins for each individual member of each asset class is added together to get the composite score of the asset class. The asset classes are then ranked from 1 being the best to 6 being the worst. Step 4. The top 2 asset classes are eligible to be deemed emphasized in the tactical portfolio management strategy. Each day, thousands of calculations are done to support the Live Oak Wealth Management Tactical Portfolio Research and determine which asset classes have emerged as the leaders according to this methodology. As the asset classes fluctuate in strength, emphasized asset classes in the strategy will also change, reflecting current market trends. You can see the market suffering a severe downtrend between 2007 and 2009. Investors who were buy and hold for the long term and wanted to retire before 2008 were not able to retire. Most of them lost their jobs, and so they had to find another job. This is why we believe avoiding big losses in bear markets is key to an investor's retirement strategy. Why is avoiding big losses the key? Simple math. The larger the loss, the harder it is to recover. You put in $100 and lose 20%. You have only $80 now. To make it up on the loss, you have to gain $20, which is a 25% increase of your current account value. At an 8% return, it's going to take 33 months for you to break even. This is why we emphasize avoiding large losses. So the bottom line is, in order to be a successful investor, we don't have to be perfect. What we do need to know is when wealth accumulation is the focus, and when wealth preservation is the focus. The goal of these strategies is to help us navigate the financial waters, whether the seas are calm or choppy, so that one day we can arrive at our end destination. Those without a strategy for knowing when to be invested and when to wait on the sidelines until we get the ball back have a high probability of finding themselves shipwrecked on a deserted island. You need the right team on your side to make sure that you hit your retirement goals. Sean McGuire, who holds a bachelor degree from the University of Georgia, has worked in financial services since 2002, in positions ranging from financial advisor to stockbroker and portfolio manager. As a certified financial planner professional, he is trained to help clients with virtually all their financial needs. Matthew Gaud obtained a BS in Finance from the University of Tennessee before entering financial services in 2000, working first as a commodity broker and then as a business development manager for a national broker-dealer. He has the insights and experience to help clients understand the complexities of the market and implement strategies to minimize risk. They will be on your side. Live Oak Wealth Management's mission is to help individuals build their wealth through 2 key principles: wealth accumulation and wealth preservation. We do this by providing our clients and their families personalized wealth management strategies that accommodate their financial needs today and in the future. Our focus is to secure, maintain, and protect the financial lifestyle that they envision for themselves throughout their lifetime. At Live Oak Wealth Management, we believe in getting personal with clients and offer the best strategy for them to achieve their retirement goals. contact us today at www.liveoakwm.com or email us at info@liveoakwm.com.